Dirty dealings, corporate battles, consumer woes. This is Evening 5. Malaysia's headline interest rate, the overnight policy rate, has been maintained at 3% following the Monetary Policy Committee meeting on Wednesday, said Bank Negara. This is the fourth time that the MPC has decided to maintain the OPR at 3% since July 2023. The headline rate was raised by 25 BPS in May last year. BNM said that at the current OPR level, the monetary policy stance remains supportive of the economy and is consistent with the current assessment of inflation and growth prospects. The MPC also remains vigilant to ongoing developments to inform the assessment of the outlook for domestic inflation and growth. The central bank explained that on the global front, while the monetary policy stance is likely to remain tight in the near term, the tightening cycle has peaked for most central banks. While global headline and core inflation edged downwards in recent months, it still continued to be above average. For Malaysia, economic growth is expected to improve in 2024, supported by recovery in exports and resilient domestic expenditure. Concurrently, downside risks are weaker than expected external demand and larger declines in commodity production, while upside risks stem from greater spillover from the tech sector upcycle, stronger than expected tourism activity, and speedier project rollouts. BNM noted further signs of recovery in the electrical and electronic sector, but global trade remains soft amid a shift in spending from goods to services, ongoing trade restrictions, and modest recovery in China. While inflation outlook is seen to be modest in 2024 after averaging 2.5% in 2023, BNM said the outlook is subject to changes to domestic policy on subsidies and price controls, as well as global commodity prices and financial market developments. Regulator Civil Aviation Authority of Malaysia has extended the suspension of MYAirline's air operator certificate by 3 months until April 14th this year, amid reports that the troubled low-cost carrier has secured a new investor from the Middle East. CAAM had in October last year suspended the airline's AOC for 90 days pending further investigations. The suspension had been due to expire last week. The suspension had been issued after MYAirline abruptly halted its operations on October 12, 2023, without prior notification to either CAAM or the Malaysian Aviation Commission. This left some 125,000 of MYAirline's passengers, who had purchased 22 million worth of tickets, stranded. When contacted by The Edge, a spokesman for CAAM confirmed the extension of the suspension. Out of the 10 aircraft previously under MYAirline's management, 9 have been deregistered by its lessors. Presently, only 1 aircraft remains registered, according to the CAAM spokesman. It is understood that MYAirline is also in the process of getting a conditional air service license from MAVCOM. MYAirline's ASL had expired on November 14th, 2023. A MAVCOM spokesman declined to comment on the matter. IHH Healthcare's unit, Pantai Medical Centre, has inked an agreement with Pelaburan Hartanah for the development of a new medical block adjacent to the current Gleneagles Hospital Kuala Lumpur complex. The healthcare group said the new medical block will be leased from PHB for 2 decades and that the new expansion would herald a new growth phase for Gleneagles KL as one of the largest private hospitals in Malaysia by 2027 with over 700 beds. IHH CEO Jean-Francois Nar said that the deal will enable the group to deliver exceptional care to meet the growing demands of local patients and medical tourists. The new purpose-built medical block for Gleneagles KL is to be completed by 2027 and envisioned to encompass 470,000 square feet in gross floor area with over 260 beds, subject to regulatory approvals. PHP Group Managing Director and CEO Damshal Awang Damit said given its aim of achieving a 25 billion asset portfolio by 2030, PHP is strategically rebalancing its investments in healthcare, industrial sectors, K-12 schools and data centers to ensure sustainable income. He said PHB is also dedicated to providing added value as a monetization and financial partner, enabling its collaborators to concentrate on their core business while efficiently allocating their capital towards primary operations. Sime Darby Property, through its wholly owned subsidiary Seed Homes, has signed a shareholders agreement with Lagenda Properties to set up Seed Homes Lagenda, a 50-50 joint venture to develop affordable housing, according to a statement. Seed Homes is a new portfolio under SDP set up to deliver innovative solutions in the affordable home segment, and Seed Homes Lagenda will be SDP's maiden foray into the affordable township sector. SDP's Group MD Dato' Azmi American said the partnership will serve as a vehicle to commercially develop affordable homes to provide greater access to home ownership for a wide range of customers. Lagenda's Managing Director, Dato' Jimmy Doe, said the JV leverages the strengths of both companies to deliver a new standard in affordable housing. Seed Homes Lagenda is set to embark on its first affordable township project in Gurun Kedah via the acquisition of a 249-acre land parcel from SDP. The project aims to capitalize on its strategic location and spillover effects of the potential industrial growth in Gurun, and is anticipated to yield over 3,000 affordable homes. Betamek's net profit for the third quarter of FY 2024 rose more than twofold to 5.05 million from 1.66 million a year earlier. This was on the back of revenue improving by 8.2% year-on-year from 54.7 million to 59.2 million ringgit. According to Betamek, the higher top line was mainly from its vehicle, audio and visual product segment, adding that its revenue was entirely derived from its customers in Malaysia. It declared a second interim dividend of 2 cents per share. Executive Director Fauzi Ghani said the better numbers were due to Betamek's better control of its administrative and operating expenses. On its prospects, Fauzi said he was confident that demand for its vehicle AV products and vehicle accessories will continue to grow in tandem with the increased demand for its major customers' vehicles. He said Betamek is cautiously optimistic of its potential performance for the current and the succeeding financial year. It should be noted that Betamek recently had to clarify that the ongoing investigations by the Malaysian Anti-Corruption Commission, which summoned its Managing Director Mirzan Mahathir for questioning, have nothing to do with the company. As such, Betamek said it would be business as usual.